Hey gang, welcome to the eMISTrade.com recap video. It is Wednesday, the 23rd of February 2011, and another good day down today. More selling into the market. Looks like we could be starting a correction here. But we are, let's take a look at quick levels here. We are down into that 50% retracement, 61.8% retracement from the swing highs that we talked about. So we're right in this area here. We'll see how this area holds up over the next day or so. We do have some news and of course GDP out on Friday, so we'll see if this holds or not, or if the bulls are going to come back in and start moving this thing back up. For levels tomorrow, let's watch this congestion that we saw back in the 1310, 1312 area. Once we get back above the 17, the 13, 17, 50, then there's probably a good chance that we could start to move up from here. Now, as long as we stay below that level, probably 1293 is something that they're going to be targeting tomorrow or maybe on Friday. Now, to continue on what we were talking about the last couple days, getting into a trade that's in line with the trend. Let's go ahead and work the next level of this, which is the trade trigger. To recap of what we just did over the last few days, we identified a trend, through various methods, whether it be a trend line or an EMA or whether you use a CCI or whatever the case may be. There's a lot of different areas, and we're on a 15-minute chart, by the way, and so we identified a trend on the downside here. Now, typically I won't trade a trend this early into it, but for illustration purposes we'll use this one. Now we want to look for areas of interest to get involved with this trend, and we want to go ahead and sell pullbacks or buy pullbacks depending on which direction it is. In this case, we used some Fibonacci's from the swing high to swing low, saw a pullback in that 50% to 61.8% retracement is an area we're interested in. Also, there was an EMA that was providing some resistance. We had some prior price support, which now is a price resistance area, along with the actual trend line. So we had this area right here that we're interested in maybe getting involved as long as it holds. Now, once we see that starting to hold, we want to move down to a lower time frame into what we'd call a trigger chart and see if we can get a signal to get involved with this move right here, which happened to be a very good move. Now, hindsight is always 20/20, but in this case the illustration works pretty well. They don't always work this good, but nonetheless as you'll see, we go to a lower time frame. Now, you could use a tick chart, a range bar chart, or just a regular time chart, which in this case, this is a 1-minute chart, 1-minute candles here. And again, we use the same CCI setup that we have on the last one. I do not have an EMA up here, but some people use crossovers on short-term EMAs. Now, once we saw this area up in this 34 area holding, we don't want to just blindly take this. We want to wait for some type of structure to set up. So in this case, we see that it pulls back off that area and develops a low, and then it moves back up and it runs out of gas on the way up. Aggressive traders down in this area, number one, aggressive traders would probably want to get involved with that. That's probably a 50% retracement off this move right here. You'll see some traders getting involved in that and placing their stops above this level. It's a very defined stop, and it's a good level to get involved, which has good risk-reward ratio as well. Now, less aggressive traders, more conservative, will wait for the break of this low right here to make sure that the sellers are involved with the market and that they're going to take this thing down. So number two would also confirm that. The other thing is that once number two triggers right here, you also see that the CCI is actually below the zero line, which also gives you a little wind behind your back right there. So both happen to work on this trade right here. However, both, if they do not work, you have a defined stop, which typically is above this area or higher, depending on what your tolerance for stops is. And then from there, you just have to manage the trade with targets and trailing stops, which we will be talking about tomorrow. So tune in for tomorrow. We'll talk about how to manage the trade now that we're in it, and we'll go further from there. Otherwise, for tomorrow, gang, sit on the sidelines for the first 30 minutes. Check your economic calendars because we do have news out. Otherwise, trade well. We'll talk to you then. Take care.